Hello guys, this is Poppyjoe FS right here. I'll be making my analysis, a full detailed analysis on AUD USD. I've been making this series of videos recently. I picked an interest in doing a top to down analysis on different instruments. Okay, I would like you guys to just subscribe to my YouTube channel and also follow me on TradingView. Okay, so that will really go a long way in making me build more of this kind of content. Okay, so now one thing I have actually noticed about AUD USD, and the reason why I'm doing a top to down analysis is just to make this trading job, because it's a job obviously, to make it quite easy for anyone. Okay, because one thing that every trader struggles with, and me inclusive, I actually struggle with this fact before now, was making analysis on the lower time frame, or just picking a side. Someone saying I'm a day trader, I don't have any business with monthly or weekly or whatever. That thing, it might really be in a way, we can just decide to like choose it. Okay, let's just fuck it, like let's pick whatever I want to do. But the way I want to do this top to down analysis, trust me, is going to suit any type of trader that you are. Okay, because when it comes to trading, it's not going to be about maybe the time frame you're starting from, maybe your view and all of those things. This is going to be a detailed way or approach to do a top to down analysis, and all the information will still be intact and they will make sense. Okay, you might wonder maybe that's true, or how is that possible. Yeah, let's just get into it. Okay, I will show you how to do a detailed analysis that will make your chart look, is going to look so superb, and every information will still be in check. You will still understand exactly what you are doing. Now let's start from the 6 months time frame here. And what we can see here is that the market was in a state of a downtrend at this point, and of course there was a change of flow. We can call this here the point of the change, right? Which is what we can call the market structure shift. You can call it market structure break, market structure shift, change of character, different names that people call it out there. So let's just not let me not take much of our time. Now this is it. From this low here, this is the market structure shift. You understand? Market broke the structure to the upside. Let's now start marking the points. The important things I mark out on higher time frame. I don't fail to mention that things I mark out on higher time frame, they are just very easy. I mark out imbalance at point of liquidity. Okay, now in this case here, the market has made a large impulse to the upside. This here was a fair value gap that was left for price. Price left this fair value gap, a very good one, and then we saw price coming back for a consequent encroachment. This was a very superb one actually. Market came back for a consequent encroachment, giving this opportunity for you to join in, of course, to take your trade from this point and get out at this high. Now we all know that a consequent encroachment is not like a final or a total mitigation, right? So the low of any consequent encroachment happens to be like an inducement. Okay, anytime you have market mitigating, maybe partially an order block or something, or a fair value gap, that point, that mitigation might just be like a kind of half mitigation, not a full mitigation, and the market can still come back and induce that point, which is exactly what happened here. The low that was created here was later induced. Now let's mark the zone, the demand zone that price came back for, because obviously price was leading from a demand area. Okay, price was leading from a demand point here. Okay, so let me just mark this as our demand point, and now we have a demand zone that we could say sponsor all this move to the upside, and now we have an inducement. Okay, now market has taken out that inducement to tap back. Now this is not a proper mitigation into that demand zone. Now we can expect this high. Now obvious from this time frame, we can expect this high to be taken, like from this time frame. That's the obvious thing that we can see on this time frame here. So we can just label this as a potential liquidity target. Okay, that's the potential liquidity target. We can't really say it's a draw on liquidity here, but based on this time frame, we can call it a draw on liquidity. Okay, a draw on liquidity. But for me, I'll just put it as maybe GOL for instance, for short. Because in any other flow, in any trend, market has made this higher high, we have this as a potential higher low, so we can expect a new higher high. Okay, but this is on the 6 months time frame. Now let's take it down to the lower time, which was on the 3 minutes time frame. So now this is our demand zone, more clear. Now the 50% that we had on the 6 month time frame, okay, yeah, I limited my zone here to show only on the 6 months time frame and above. So now this zone that we have here, when you go to the 3 months time frame, that consequent encroachment was reacting off this week to week base. Okay, I've taught this in my series or in my class, a week to week base, what it means and all that it entails. So the market was reacting off a week to week base here. Of course, it's a good reaction point, but not the one that could actually give you when we talk about week to week base, price can still come back and induce, just like exactly what happened here. So we saw this as all this move here was like a proper inducement. Okay, so now following the story of price from the 6 months, we have a bullish move. So that means on the 6 months time frame, our range, because when it comes to trading range, I always assume or take trading range. A bullish trading range will come from a strong low to a weak high. So in this case here, we have our range from this low to this high here. Okay, I would like take it from this point to this point, but then just to so it doesn't make our chart messy, we have the same thing here. Now, this is a 6 months trading range, meaning this is the discount area and these are the premium areas. Okay, now taking it to the lower time frame here, the same thing still applies. Okay, we still have this as our trading range and price will trace deep into discount back to this area. Of course, taking this sell side liquidity as an inducement. Okay, take note of that as an inducement. Now, the 3 months time frame, there's still nothing much. Markets, of course, it went down here, but on the 3 months time frame, based on market structure overlook here, we have not really seen a break of structure upwards. What we can call a market structure shift here. So this high is a potential target that we can use in getting our market structure shift. Okay, this high here is a potential area of target. Okay, we are targeting that area. So let's just put that point as a buy side liquidity. Of course, also a draw on liquidity to be precise. On that draw on liquidity, because that's a potential target point. Now let's go to the monthly time frame. So now you can see how we have been scaling down to the lower time frame, having our bias all in check. Now we have seen that the market has like tapped into a demand zone and has taken out the sell side liquidity, and we can look out for price reacting or start chasing after a buy side liquidity. Okay, after taking sell side liquidity, the market has it has an habit of going after the buy side liquidity. Now, following this story of price, even here, we don't have much to do here. Let's go to the weekly time frame. Now, on the weekly time frame, it starts getting interesting. Okay, on the weekly time frame, it starts getting interesting. The first thing we had here was a market structure break here on the monthly, to be precise. Yeah, we have a market structure shift to the upside here. Okay, because we can see market was going down bearish, 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 and now market already closed above this last point of supply, the one the one that sponsored this move to the downside. So market has given us a green light on the monthly time frame that this guy has already shifted upwards. So that means a new trading range has been formed from this low to this high. So this is like my own way of like I said, you can actually scale these things down from higher to lower time frame. Now you can now see the trading range, an overview of what trading range is. Now we have a trading range from here to here because this is a break of structure, a strong low to a weak high. So this high is also a potential target point. Like I said, this is under drawn liquidity. You can just put as a magnet because the market is obviously going to target that point as well. Now let's go to the weekly time frame. Now just what I just showed you here, which is the market structure shift, the one we have here. Let's find something similar to that around here as well. So looking at what we have here, guys, we have seen that the market has made a large impulse, from the monthly time frame, obviously. Now let's start marking out interesting zones. This is a demand zone. Okay, this is a demand zone, obviously. that it has a lot of interesting data for us to be precise. Okay, and then we have this low here as a sell side liquidity. Okay, we are taking this imbalance low here as a sell side liquidity, and then this is our demand zone. So here we have a kind of a market structure shift also, although we did not get a candle close above, but we're taking this as a market structure shift. Yeah, now you can now see the information is getting clearer and more interesting. So if you are taking this as a market structure shift, it's implying that the market is now what ready to start going up. That means this whole retracement here. Now you can see it's not like a retracement inside a retracement, okay? Because this whole move here is a retracement. Coming from the 6 month or 3 months time frame. This whole move all down is a retracement. Now scaling all the way to the lower time frame, we have a different, we're now starting to get different range. Okay, now this is the range from monthly. Now this is on that range because now I'm seeing this as a market structure shift. Now this is on that range here. So this is, I said, as any type of trader that you can be or you want to be, there's always going to be a way you can do higher time frame analysis and everything will still make sense to you. Okay, now let's now look at this range, this newly created weekly range, because I'm dealing with the range as well as we are getting it. Now let's look at this newly created weekly range. So first thing I look out for is my imbalance point, right? And obviously I can see this fair value gap here. Fair value gap, now the market already used the yield fed here, and of course, I did my back test, my research, and I found out the week to week based thing that I taught in one of my recent lessons, whereby I said if market was going to use EO Fed and the EO Fed is on the weekly time frame, go to the daily time frame, you will find a week to week base that supports that. Let's quickly do a little play here. This is the imbalance I marked here, and let's check it on the daily time frame. Okay, now this is the fair value gap, and of course, like I said, that's the EO Fed. So let's see if this is showing on daily. Yeah, I want to show on daily. So let's go to daily, and then this is the week to week base. Okay, remember I said if market will use EO Fed, it will tap into a week to week base, and of course this is the week to week base. But let me just mark the lower week here and play this dude. So you see what happened there? Market used that week to week base. So that's just by the way, actually, a lesson you can add to your arsenal. Let's go back to the weekly time frame because that's where we are now. So now dealing with this range, we have this imbalance here, right? And the market just made a form of EO Fed entry deal. That's the institutional order flow entry deal to take out this high. Now the market is now doing a retracement back to discount. So first thing, we have this demand zone here, this week here. So this lower week, I mark it as my demand zone, okay? Because now let's start scaling this whole thing down. Let's start scaling this whole thing down. We have this as a form of consolidation. Okay, this low is a sell side liquidity that has been cleared, to be precise. The sell side liquidity has been cleared, and of course, market took out buy side liquidity as well. Okay, now you can see what happened here. This is a clear accumulation here. What you can call a consolidation. Okay, this is where it gets interesting. This is like a kind of consolidation, and this sell was like the manipulation. It's very clear, like really clear from this point. This is like an accumulation, a manipulation, and a distribution. So that means we'll take this break above this high as a market structure shifts again. Okay, so you can now see how this whole thing is getting interesting. Okay, how it's getting interesting. Now, if this is a market structure shift, that's giving us a clear view that on the daily time frame, a new range has emerged. Okay, that means this whole move here now, a new range is on the daily time frame. Everything is already aligned. Okay, everything's already aligning, and let's just make a little bit of adjustment here. Okay, let me mark this like this, and this thing here should not show on this time frame. We don't want to show it on this time frame. It should just end on the weekly time frame. So now we have market taking out sell side liquidity and buy side liquidity, of course, forming a consolidation, and this move lower. Okay, accumulation, manipulation, distribution. That's the ICT power of three. Now here also we could see market taking out the previous low, of course, a tiny one though, and then let's pick this area of demand. So I'm picking this area as an area of demand. Okay, now this is now the previous high. You know, I like to call all those points, you know, of course you can call it intermediate short-term high and all of those things. But then this is the previous high, like market built the structure here, closed above this point. A retracement is possible for a newer high. But market failed to create a newer high here. So that point and that high is still going to be a target. Okay, it's still a target that we are looking at for price to be expanded towards. We are still expecting price to come and take out this high target, right? So now let's now start looking at the interesting part of it. Since market has done a form of retracement, let's mark our new range. This is our new range. Obviously, that's our new range. So now let's just look at it in this form. Market is already retraced. It retraced back to deep discounts. And what zone do we have there? We have this zone here. Okay, that means market returned back to this zone around here, and then maybe it made a rejection, but then did not close above this high. Okay, that's the only thing here. Market did not close above that high, so we got very curious. For me, I have this zone, okay, as a potential point. Now let's go to 12 hours. That's how you scale down your setup. Okay. Now let me mark this as a form of probably a range, because now it's a retracement phase like this. So let's see it as a range. Probably on the 8 hours time frame might be more subtle, yeah. All right, good, very good, very good, very good. So this is the demand zone I marked, and this is the range. Very clear setup, very clear views. Now let me just adjust my zone here also to this. But there's something I want us to see here first to make it more interesting to us. Look at what we have here. This here is like a breaker pattern, right? You notice how a breaker pattern looks like. Okay, and the best type of breaker is the one that has a fair value gap for continuation. So in that case, I noticed something here. This point to this point is a fair value gap. Let's extend it to this area here. And then it is aligning with a point that we can call a breaker point. Okay, what we can call a breaker block. Now, I've noticed and I've practiced this thing so many times. I know that breaker block serves as a good impulse move, like they give good confirmation, especially when it has fair value gap. So I'm looking to take a buy from here. Of course, you know it's not a small, it's not a short-term projection, it's a long-term projection. So meaning this area is a good zone for a buy, and then of course taking out all these are short-term highs and all. So here, if that's the case, let's now streamline this thing to the 4 hours. So on the 4 hours time frame, I am adjusting my zone to this, and I'm taking this low as a sell side liquidity, because it's like a very clear zone, a very clear demand zone here that I might expect price to come and still raid that low. Okay, I might be expecting price to come and raid this low to tap into this demand. That's if we're going to be getting a continuation just from here to go and take out this high. So in that case, since market has failed to create a new high, most of the things that we expect is that, or we experience is that markets will go lower to chase this previous low here and take this low as a weak low, since it's not breaking the previous high. But then what we can see here is that this sell side liquidity is very much valid. And on the 8 hours time frame, I have a zone for a possible continuation for sell. So we might get a breakout here, and we are going to be shorting this thing from. So guys, that will be all for now. So we're selling from here. See you on the next one, and this will be our target. because we have a short time on this Zoom, and that is going to be the projection. See you on the next one. Make sure to subscribe and follow.